Hello, I'm thinking about doing an intro to Bitcoin video on my main channel, so I thought I'd give you guys a sneak preview, and if you have any questions or comments, I'd be curious to see what you think of this. It's an intro to Bitcoin, but really I should call it an intro to cryptocurrency. It's just that most people know about Bitcoin as the example, the main example of cryptocurrency. So here's an outline. The big picture idea is that the invention of triple entry accounting is new in the history of accounting, the history of money, and makes this whole thing possible. The most successful example of that is a blockchain called Bitcoin, and that is one of the first digital currencies to have wide acceptance. But there are other cryptocurrencies like Ethereum, so I'll talk about those too. And then if you have a pile of cash sitting around, what should you do with it if you want to get involved? I'll give you some investing advice. And then I'll talk about maybe the next big thing, which are NFTs or non-fungible tokens, like digital trading cards and that kind of thing. Okay, so let's get started. So first, I want to talk about the major inventions in accounting. Now, why on earth would I talk about that? Well, it's because Bitcoin is a new type of money, so we need to look back 5,000 years ago with the invention of accounting, the invention of writing, to kind of put this in proper place. So with the invention of writing came the idea of single entry accounting, because one of the first things people did was write down who owes who what. In the ancient scrolls and carvings, we see this. Here's an example of single entry accounting. Let's say Aya lent Bob 100 silver, and then later Bob repaid Aya 80 silver, and then later Bob repaid Aya 20 silver, so now the debt's paid off. So this is actually a lot easier than trying to remember it in your head, because you could actually write it down and keep track of everything. And this is especially important if you have lots of debts, you're lending different bushels of wheat or silver and gold. And so the invention of writing made this kind of accounting possible, made all kinds of new kinds of commerce possible. But it required literacy, because you had to know how to write, and hardly anybody did back then. And so maybe the one scribe could do it, but you had to trust that scribe to write it down accurately. Also, there wasn't really a way to audit this, so you could only audit it by trying to remember what happened, but there wasn't really any other way to audit that, and there's no way to verify it. But still, this is way better than trying to remember it in your mind. And so the invention of single entry accounting was an important invention and an important way of doing commerce, because you could write things down instead of remembering it. Let's fast forward a couple thousand years to the next major invention, which was double entry accounting. This book is from 1602. It was probably invented in the 13 or 1400s. The Medici family used it in Italy, but probably it was invented several places in the world, like most major inventions. And the basic idea is this, that you enter everything twice in credits and debits. So for example, Giovanni lends 5 gold to Bob. Giovanni would say -5 in the assets column, +5 in the liabilities column, and then you have this idea that assets equals equity plus liabilities. So this minimizes errors because you're putting things in 2 different places. It also allows for audits and for the balancing of the books. Now with this invention, along with a lot of other inventions like the printing press, commerce, credit, stock markets, centralized bank ledgers, all of these became possible and made a revolution in the way that you could do money and finance. But technically, intentional fraud is still possible. So single entry accounting meant that you didn't have to remember everything in your mind, you could write it down. Double entry accounting meant that it was easier to do audits and checking the books, although there was still the possibility of intentional fraud. Just think of Enron a few years ago. So how do you solve that? Well, that's the next one. Let's fast forward to the 1980s for the invention of triple entry accounting, probably first described by this professor named Yuji Ijiri, but implemented in 2008 by Satoshi Nakamoto with the invention of Bitcoin as the first major implementation of this idea. So here's how it goes. Let's say that Alice pays Bob 0.02 Bitcoin. There are 3 entries. One is a debit of 0.02 from Alice, and then 2, a credit of 0.02 to Bob. And then here's the key thing, a third entry, which is a cryptographic hash confirming the transaction as valid. This verification happens mathematically, and also, in a sense, it's always like a continuous automatic audit, and so you can't cheat this system. The Bitcoin blockchain was one of the first major implementations of this idea of triple entry accounting. And so I want to give you some key ideas without going into detail. Back in 2008, this mysterious figure named Satoshi Nakamoto announced a new electronic cash system, and he released this 8-page white paper that described it in detail. And then over the next few months and years, he implemented it with a team of other programmers, and that became Bitcoin. Okay, so let's look at some of these key ideas that make the Bitcoin blockchain work without going into too much detail. First of all, it's a public distributed ledger. What that means is that everybody can see how much each address owns, and you can see all the transactions. Now, it doesn't have the names in there, but it does have accounts in there. And so maybe with big data, you can kind of see who is who and what they're spending money on. So it's not very private, although there is some privacy built in. This ledger is distributed on lots of different servers throughout the world, and all of the servers agree on what the official canonical ledger is. There's a lot of detail about how that happens, but for now you just need to know that everybody can see everything, so we know who owns how much Bitcoin and who paid what to whom. Now, how is this possible? Well, one of the key ideas is that this is audited by mathematics. There are these things called one-way hash functions that prove the validity of the ledger, and also it plays a part in determining who gets to add new blocks or who gets to do the mining. And now I talk about this a little bit in my billion-dollar math problem video, which is on my main channel, so go take a look at that. And then also there's this idea of public and private key cryptography, which is a really cool new invention. Well, not that new, a couple decades. But basically there's a way of coming up with a key, splitting it in half, and you keep the private part, and then you can make the public part, and people can use the public key to send you information that only you can decrypt. Also, you can sign things with this public key, and that proves that you were the person that authorized that transaction, and that's how Bitcoin uses it. So there's a lot of detail in there. But what that means is that Bitcoin cannot be stolen. Now, wait a minute, you say. I've heard all these news stories about people hacking and getting into, somebody else's Bitcoin. North Korea has been accused of this. Well, it turns out that your Bitcoin is as safe as your key, and these hacks are always stealing the key. So your Bitcoin is there on the public ledger. It cannot be stolen unless somehow you give up your key. Now I'm going to do a whole episode about how hardware wallets work and talk about this stuff in detail because I think it's really fascinating. Now, to prove that this is secure, there was even a news story about how cops couldn't access $60 million worth of Bitcoin because the person they arrested wouldn't give up the password. So it's stuck there, and only that person can access that $60 million. Okay, so maybe you've heard of mining and how much electricity it uses. This is one of the key criticisms of Bitcoin. And what is mining? How do you get new Bitcoins? Well, basically, miners are people who add to the ledger. They take the transactions that people are trying to do and put them into this public ledger. And they do that because they get a Bitcoin reward for doing that. They get a little bit of Bitcoin each time they do this. Now, why would we need to give away free Bitcoin to people who do this? Well, it's because it's really, really hard to do that. It's mathematically hard to find something that fits and makes a valid block onto the blockchain. And by hard, I mean it uses a lot of computing power, and a lot of computing power means a lot of electricity and a lot of money to do that. In fact, that's one of the key criticisms I mentioned before, is all of the electricity used up in trying to do Bitcoin mining. However, there is a solution that we may have to move to at some point, which is a transition from proof of work to proof of stake. So, if there's another way of doing it, why doesn't somebody just make another kind of coin? Well, I'm glad you asked, because they do. That's what I want to talk about next. Different types of cryptocurrencies. Bitcoin isn't the only one. Here are the different uses of cryptocurrencies. Actually, let me change the color so you can see a little bit better. One of the uses of cryptocurrencies is just to store value, kind of like owning stocks or real estate or owning gold. These are all different types of asset classes, so people who want to diversify might want to diversify into maybe Bitcoin or Ethereum. Those are the top two. A second use for cryptocurrency would be to run something called smart contracts. Now that just means that instead of having just a ledger of who owns what, you can actually put bits of code to do things like automated lending, automated exchange of tokens, and these kinds of things. And so there are a bunch of cryptocurrencies trying to do that. The key ones would be Ethereum, Cardano, Polkadot, and Binance Coin. And that's a little bit like the real world equivalent of oil. Oil is valuable, but not just for owning oil, but actually for using oil. Oil can run jet engines and cars and things like that. Another use of cryptocurrency would be person-to-person payment. Like if I want to give you $20, I can hand you a $20 bill, but if you're across the world, that's hard to do. But with cryptocurrencies like Nano, that makes it possible to do this within a few seconds. And with Nano, you get the full amount. So if I pay you 20 Nano, you get 20 Nano, not 19.999. There is no fee involved. Also, you may want to do this in the future with machines paying other machines, or the Internet of Things. And so IOTA is an example of a cryptocurrency that manages that. Another kind of coin are coins that help to run exchanges where you're swapping different kinds of coins. And so Binance Coin is an example of that. Uniswap is another example, or Chainlink. Finally, there's a kind of currency that's just mainly for speculation or for memes or for doing that kind of thing. So Dogecoin is an example of that. That's been in the news lately. Another example is Raven Coin, one of many that has to do with the NFT world, or the non-fungible tokens world, which I'll talk about in a second. So all of these different things, the question would be, what do I invest in? Okay, so let me talk about investing in cryptocurrencies. So a quick disclaimer, this is not my opinion, this is investment advice. Basically, you need to find money that you don't need for 10 years. So I'm talking about extra money. Don't borrow to do this. Only what you can afford to completely lose if all of this goes south. So here's what I'd say. Buy some Bitcoin and Ethereum, and then wait for 10 years. So, see what happens. Well, right now, it's March 2021. One whole Bitcoin is worth $57,000. One Satoshi is worth 0.057 cents. What that means is that $1 US can buy 1,700 Satoshi. Satoshi is kind of like the Bitcoin cents, although there's 100 billion of them. So that's my advice. Just for context, Ethereum is at 1,800 right now. Which coin should you invest in? Well, I don't really know. And I'm going to use an analogy. Remember 1998? It was the beginning of the internet, and maybe somebody would have asked themselves, in which company should you have invested back in 1998, right? Well, if you had a pile of cash back then, maybe you could buy some Yahoo, or Netscape, or Cisco, or Amazon.com, or Excite. And we all know now that the right answer would have been Amazon, but it wasn't super clear back then, right? Well, the same thing is true now. I think that the idea of triple entry accounting and smart contracts and decentralized finance, those are all here to stay, and they're amazing, and they're going to change the way that we do finance. But it's not super clear right now which coin or which system is going to win out in the end. Just like it wasn't clear back in 1998 which of these companies, or a whole bunch of other companies, which ones would survive for the next 20 years. And so we've got lots of different coins here, and there are different use cases, and it'd be useful to sort of look into this and research a little bit about what each of these coins do, and then invest in those if you think it's the next big thing. Finally, speaking of next big things, what is the next big thing? Maybe they're NFTs. What is an NFT? It's a non-fungible token. What does fungible mean? Well, money is fungible. What that means is that each $20 bill is the same as every other $20 bill. But there are things that are non-fungible, for example, trading cards of a specific number or specific person. So that's what NFTs are, non-fungible tokens, and it seems like there's a whole ecosystem. You can use digital NFTs on the blockchain to make this kind of thing in the digital realm, just like trading cards are in the physical realm. So that may be the next big thing coming, nobody knows, but it seems to be making a bunch of news lately in the past couple months. Okay, so there's my quick intro into the idea of cryptocurrencies in general and Bitcoin in specific. If you have any questions or if you have any comments, I'm thinking of sort of cleaning this up a bit and putting it together on my main channel. So I'd be really curious to see what you guys think, and let me know if there were some parts that were confusing or if you have some suggestions about other things I could cover. Okay, thanks for watching. I know this is a little bit longer than usual, but I appreciate you making it all the way to the end. All right, take it easy. I'll see you next time.